What drives you to keep building, Brian, to keep going for it?
I think it's always the need to prove myself, begging your way into a business and the feeling of having to earn your spot there, just not be a number on a P&L sheet.
Meet Brian McGrath, Chief Investment Officer at Quantum Yield, bringing over 25 years of fixed income expertise to the cutting edge of AI-driven quantitative equity trading.
I've kind of always looked at myself as the underdog. My first boss will tell you, I begged my way into his office. I begged him for a job. That gave me the edge versus the other person I was competing with. I didn't come from a family that was rich in the financial markets. And you can find some people that have some exceptional drive and creativity when they've come from a place that wasn't as easy.
What is the biggest lesson that you've had to learn the hard way, throughout your career that you would reflect on?
That's an easy one to remember, but probably harder to articulate.
Brian, thanks very much for joining Leaders in Capital today. Delighted to have you on the show. I wanted to start off and just find out a little bit about who you are and what you're up to at the moment.
Sure. My name's Brian McGrath. Bill, thank you for having me on. It's been a pleasure to get to know you over the past several months. I started off in the finance industry back in the mid 90s out of college. I spent about 25 years total in fixed income trading, actually a little more, but I don't want to date myself. I started off at a regional, moved through to a bulge bracket firm. I spent 6 years there, and we can get in more detail, but just a brief, overview. And then after that, post the financial crisis, I really did a little soul searching through it and said, things I love to do most are building businesses and having an impact. So I started on a journey working at regionals over the course of probably the last 15 years of my career. And recently have transitioned from that into the world of quantitative AI driven equity trading, which is a big leap. And I'm sure you're going to have questions about that, but that's where I currently stand.
Awesome. Well, thanks, Brian, for that introduction. So excited to get into this and hear more about what you're up to recently. But I'd love to hear where it all began, Brian. And, tell us a bit about, the journey into finance, why you chose it, where that came from. And we'd love to hear, a bit about how it all started.
Well, absolutely. My financial journey emerged out of my broken dream of wanting to be a physics major in college and found out the higher math just didn't suit me. And I struggled with that. And, I moved into finance because, on the economic side of things, I'm a news junkie and always have been. And for me, that was exciting because, the world was unveiling itself in real time within that industry. And that was really the overall attraction.
Fantastic. Well, that first entry into finance, how did that come about? What did that look like? And coming from the sort of the vision of working in physics to then moving into finance, what did that do for you in terms of opening your eyes to sort of a different career path and a future that perhaps envisaged as you were growing up?
Sure. And I think this will give you a little insight as to who I am and maybe some of the decisions I made. But I remember walking into my advisor's office after I read this book called Trader Vic. It was a trader's story. I saw it at the library, looked at it, and I was fascinated by it. Walked into my advisor's office and put that book down and said, this is what I'm going to do. And my advisor looked at the book, looked at me and said, those careers are more suited for kids that go to Ivy League schools. And I'd never heard that type of rejection or analysis before. And I said, huh. And I grabbed the book and walked out of there and never looked back. And post graduation, I literally, and my first boss will tell you, I begged my way into his office. I begged him for a job. And he still reminds me of telling him, this was at Legg Mason in the mid 90s, that I would dig ditches in his backyard if he would give me an opportunity to learn. And that gave me the edge versus the other person I was competing with. And off and running I went. And I've kind of always looked at myself as the underdog. I didn't come from a family that was rich in the financial markets. My parents were both government workers. So it was a very different foreign type of job for me. I always thought I could potentially end up working for a government agency, a three-letter agency. But, this really just drew me in, and again, I never looked back. I just fell in love with it.
Well, that is that's great to hear, and I think there's some awesome stories of people who did that work, that that went above and beyond to get that first role in finance. I've heard so
Yeah.
many great stories about how they went about it, and yours is clearly one of those. I'll get into your experience in a minute, but I think I'll just jump forward a little bit now, just on the story of that and your own experience. But you've hired lots over the years. Do you see anyone do that now? Have you had any? Has it come full circle where you had people do the same? I'd be really interested to know.
Oh, absolutely. A good friend of mine who I've worked with at a couple of places had a similar background at Bank of America when he came in, and he had an edge to him and a drive that I could see in myself. And I wasn't the main hiring manager there on that pod, but he completely got my vote because of the tenacity and what it took for him to get where he was. And that's not to discount people who have a more direct path or maybe a leg up, because they're equally, once you get there, you have to earn and keep your spot. So by no means is, working from behind or being an underdog a precursor to success. But it was just one of the attributes that kind of attracted me. I always like to surround myself, not always in total, but I like the underdog. I always felt like I was the underdog. And you can find some people that have some exceptional drive and creativity when they've come from a place that wasn't as easy in path. So I like that. I value that.
Awesome. Great to hear. Well, if we go back then to that first role at Legg Mason, that how your career developed there, if you could sort of think back to that time and your biggest learnings that helped you develop, would love to hear about some of those early experiences.
Absolutely. I remember starting, and for me, these are the most fond years of my career because they were super formative. You're drinking from a fire hose, so to speak. You're taking on as much work as you can possibly handle. And it was a nice progression, but it was one where I learned to never say no to extra work. I wanted to be the first one there, the last one to leave. And that type of engagement allowed me to gain experience and some extra responsibility. I remember my first day there, Legg Mason was just starting up their fixed income department. And I got there. They were a great money manager, a wonderful company, just an exceptional management team. And I had a desk with three legs and an old phone that was broken. I didn't even have a Bloomberg at the time. And then eventually, a couple weeks later, the office took shape. I got to move to a desk with a Bloomberg that we all shared. It was before the biometrics. And it was the old screen with the trackball on it, or the old small screen with the keyboard with the trackball on it. It was on a Lazy Susan. And we'd spin it around trying to get market data, and eventually it would come unplugged. And it was a lot of fun in those early days. And I started trading broker CDs, where you would talk to the people at Dean Witt or LaSalle, find out what the CDs and the rates were for the week. And then you would build your sheet, offer them to the retail brokers, and at the end of the week, close them out and bill them. And it was a lot of fun. And eventually, without messing that up, I was allowed to move on to trading retail credit, which I was like, wow, I'm actually going to trade individual bonds because I watched those guys and listened to them all day long. And I was like, that's where the action is. And then I got there and it was great. We didn't have, computer systems that tracked inventory. We had a stack of, 3x5 cards where we kept the QSIP, the description of the bond, long and short. And then we would tie them out on computer paper at the end of each night. I'd come in each morning and I'd get the runs off the fax machine and they'd be like that thick. So instead of having inventory come over electronically, you get there, you'd make copies as fast as you could because every trader wanted a copy of all the runs who was offering what, and you'd start going through looking for the bonds that looked attractive, things you thought you could move. You might have a dealer come in and say, hey, here's a list of 200 line items that we want to move. We want to see a bid for, a single bid for all of it. And that was kind of how it was. And there was a lot of creativity around that. And that really kind of drove my interest. It's like, wow, this is entrepreneurial without being entrepreneurial, so to speak. And it had a lot of creativity to it. And that is just, I mean, it was heaven. It was a heaven for a kid like me. I loved it.
Fantastic. That is so good to hear. And it must have been so much fun as well, starting off
Oh,
in
yeah.
that sort of environment.
And I think as I reflect back, and I think that's where I got or found my drive or passion for building things, because we were building things. There's a unique dynamic that comes with a group of people that are all sitting, you know, in a foxhole, so to speak, galvanized by the same goals, the same effort. And it was like us against the world. And that right there is an incredibly powerful tool when you can put a team together and have that instilled in them. They can do and accomplish all sorts of amazing things.
And that it just builds on the underdog story as well for you, offering to, dig ditches to then, being in that sort of team environment, us against the world. And
Yeah.
we've seen it, a lot over the last 20 years, especially, with from a tech perspective, the likes of the social networks that are built and, the Googles, the Metas and all that sort of stuff. But to hear it in that sense from a finance perspective as well, it must have been really exciting. And so to talk about, that experience from Legg Mason, then moving into your next role, that grounding, that us against the world, building that to then how you got your next venture and how you've built your career after that, really.
Sure. It was, once I traded several products at Legg Mason, I moved from, retail credit to institutional mortgages, and from there to institutional credit. So I got experience at a bunch of different types of markets and really started to get an understanding of, what market dynamic is, what those characteristics are that go into making something that we call a market. And I really found that interesting. And as I saw and again, there's certain inflection points within careers, within industries, but for us, Trace was a big inflection point. All of a sudden, the transparency had shifted. Markets, and again, information transparency narrows bid-ask spread, changes the dynamic, and it changes the necessary resources that you need to compete. So my reason for moving from Legg Mason to Bank of America was really centered around that. I ended up going to business school at University of North Carolina in Chapel Hill, and from there made that transition to what really I would say was the really next version of my career, where I went from, working at a relatively small regional to what I considered the big leagues. That right there at Bank of America for those 6 years is where I learned the capital markets at a very, very high level, risk management, hedging, the importance of customer relationships, how to institutionalize those customer relationships. And that was a completely different experience, but one that was incredibly, incredibly important to me being able to take what I had learned there and move forward. But the times at Bank of America were equally as invigorating. The people that I worked with were phenomenal. I learned such an incredible amount by watching and mirroring people that were, having success at managing risk, at building relationships, at making markets. And it's a very nuanced type of craft. And it's not something that you can read in a book or, learn in a couple of weeks. It took me probably 2 full years, Bank of America, really to learn how to make money meaningfully at an institutional level. I mean, and I should rephrase this, making money is just one aspect of capital markets or trading, but doing it in a way that, again, manages your risk, lifts up your total desk, sends the right message to customers. It's truly a very nuanced team effort. And that was something that I hadn't learned up to that point. And I mean, as I sit here and even reflect on it, it was an amazing opportunity. And I thank the people that gave that to me, because that was a big leap.
Well, there's always, when people reflect on their careers, they think about, the mentors and the people that, they learned a lot from, that they were, they were reporting into. But, being around such smart people at that point, that team effort, that the cohesion that comes with that grouping and learning off the people around you, you must have, out of business school as well, and must have felt like a real lift in your career.
Oh, for sure. And you think about those times, I mean, there were really two different markets during the time, '03 to 2006 was a very stable market, a lot of, tightening of bid-ask spread. We had the advent of market access. And again, when you think about inflection points, that was another one. That was the first really, dealer, or I should say, dealer to account electronic trading system. And I got to witness real time the resistance that you had of some of the more experienced traders not wanting to use it, what it felt like to adopt it. And you get to see basically the life cycle of a technology introduced into a market, into an industry, and how it shifts and morphs and changes things. So that was spectacular. And then, of course, you've got the great financial crisis that hit, and how you manage risk and what the market dynamic looked like then. So it was a very robust, densely, an informationally dense period of time for experience. I mean, those 6 years, I mean, that was like a lifetime of trading.
And to be there with the adoption of a new technology like market access, but at that point, you talk about the resistance from people not wanting to use that. I think we like to think we've come a long way in terms of being tech savvy, but even still, in today's environment, there are people resistant to newer stuff coming out, or people that think that they are advanced or savvy in respects of technology use, or whether it's AI, whether it's, but in reality, just scratching the surface versus what is potentially possible, and what is possible at the moment. Certainly we'll come on to that. So how does that, for you now, working in the in the role that you are with the organization, the part of the industry that you are, looking back at that point again with some really smart people, how did that level of adoption, or at least the transformation of using those technologies, perhaps reflect today's situation and what's going on?
Yeah, I think the adoption of technology, I think it's become easier, more accepted, but there are still, I mean, all you have to do is look at human nature. You know, People are interested in adopting things that propel them forward, not necessarily adopting things that disintermediate them or make them less valuable. And there's a trust mechanism as well. It's, do I trust that this technology is better than I am, more capable than I am? Is it a tool to make me better, or is it trying to, put me in the dole, as you would say? I think there were probably three classes of people: early adopters, people that were kind of middle, and then people that went kicking and screaming, but eventually had to get there. And I think the thing that our generation has really had the benefit of is seeing the internet, seeing the tech bubble, seeing how these things have changed industry, just in a very, again, a compressed period of time. And that term creative destruction became, part of the lexicon, right? Where you have, I should say, that if you're doing your job appropriately and using the technology, you are destroying, changing, making better, reformatting, reconfiguring, what existed to what will be. And there's two types that can do it: those that do, and those that don't, and those that don't get left behind. And there were a lot of stories. That's not original thought. We just saw a lot of that over a period of history.
Yeah.
I think today's technology, people are, I think they're quicker because they know they have to be, not necessarily because it's more comfortable.
You mentioned the crisis. You were at B of A at the time. Reflecting on that experience, what did that teach you about yourself as much as about the markets? And I'd love to hear about your experience in that.
It was so much fun and so insane and so stressful. all at once. It really taught me the importance of resiliency and the importance of a good management team. I'm not going to name names, but when your manager looks at you and says, whatever you're doing, keep doing it. Don't quit, don't give up, don't worry about the losses, don't get locked in on your gains. Just make your markets, break your markets down until you find a place for them to clear. I mean, I had a lot of that, mentorship that instilled that level of confidence that it takes to sit in there in a market and not only take your shots on a daily basis, but you have to remember at those places like a Bank of America, you're a forced market maker, sitting on the sidelines on your hands, not taking risk, not making bids and not making offers was never an option. That wasn't who we were. Those weren't our values. And our job every day was to go in there and be the same trader in 2007 and 8 that we were in 2003 and 4. And it taught me about resilience and self-reflection, recency bias, all sorts of things that creep into your process that are very, human emotionally driven that can derail things. So you're always checking for that. And those are things I've learned, you know, under the pressure of that type of situation. And I'm so thankful to have had it because, look, if you came into the business 2010 to now, with the exception of maybe, we had, a little bit of a yield hiccup in, right around 2018, I guess, the taper tantrum or whatever it was. And I don't even remember the date. It might have been earlier than that. Might have been 15. Then, of course, we had COVID. It's been a fairly smooth market. We've not seen the wealth destruction that we saw during that period of time.
With the experience of the crisis, to then go into something like a COVID and other examples that you've given, obviously there's the classic saying, this isn't my first rodeo, but how, having gone through that experience, did you see it differently? And taking some of the learnings that you had from your mentors, from your leadership during over time at B of A, how did you then instill that in your teams over subsequent periods?
It was pretty much it was the same message as far as, making our markets, but also too, again, you have to think, at that time, I was at a smaller bank. We were just kind of getting things going. And you have to match the trading style to the culture, the risk culture. So it was very different, but the underlying technique and values, so to speak, are still the same. But at a smaller institution, your expectations that are placed on you by customers are different. But what really changed during that period of time, which I think will also parlay nicely into what we've seen as far as changes in market structure post COVID, was the fact that early on, the Fed was quick to step in and put its finger on the scale. The invisible hand of the Fed stepped in and said, we're going to buy credit. They basically backstopped the market. And when they did that, it changed the market from a risk profile and risk dynamic forever. Because up until that point, I should say up until the point of the financial crisis, we didn't have a template for Fed involvement and what that would potentially look like in terms of market structure and price action and customer demand for liquidity. And when the Fed did that post COVID, that changed everything. And then, of course, the vast amount of money supply and printing that was pushed into the market from around the globe basically reshaped the market from that period of time in early 2020 until present day.
So, B of A, the experience there, you then moved into, you talk about different cultures, different trading environments, different risk management. How did you find the shift into the world of the regionals?
Because I started off at a regional, I felt comfortable in that environment. But again, the main impetus for me was having a greater level of creativity. I mean, when you're building something, you're creating something. Bank of America was a wonderful experience for what it was. But to be honest, I was just a name on a trading P&L sheet, or not even a name. I think there might have been a book number or, 3 book numbers that you might have had. So, you come into that situation where, I remember specifically sitting at my desk one day on a Monday, and I'd heard a gentleman was let go on a Thursday. And I'm sitting at my desk and I look and I see this guy walking down the floor. And I'm like, wow, that looks like the guy that was let go. And he sat down and everybody in the row, both rows got super quiet. And apparently they had forgotten to tell him that he was let go. He was on vacation and just kind of showed up. And we were all just horrified because of, what had happened, how it was going to make him feel and have to experience that with him. And that was like what working at a large bank was like. You sometimes didn't know the person on the other side of the screen. The person next to you could be there one day and gone the next, and a new person sitting there. So it was a different type of not only environment, but culture and interaction dynamic was very different. At a smaller firm, it's a little more collegial. You know the people you're working with in a little more in a more intimate way. It has more of a close knit feel. So when I moved over to those places, the big difference was the lack of resources. I knew how to create and take a business that was, underperforming, at a low level because I knew what a high performing business looked like. I wasn't a genius. I just happened to have that level of experience that the people at these smaller places didn't necessarily have the advantage of having. So for me, going in, it was all about replication. Okay, what can I build here based on the culture, the risk culture, the number, the amount of resources they have available, and ultimately where their vision is to take the business, what their goal for the business is. My goal for the business was always to go to the top, to be the best it could be, to be the best regional broker dealer that existed. And, that type of fantasy at times runs in up against the headwinds of culture, management structure, and resources. So really early on, that's kind of what we were dealing with. But again, another market inflection that gave us a tailwind was because of and so I started at Stifel in 2010, because in January of 2010, after my garden leave was up with Bank of America. And when I started, market access had just allowed the regionals on to trade. And the reason they did that is because the liquidity wasn't deep enough on the odd lots. And to that point, the large broker dealers, the top 5, 10 banks had kind of ring fenced that system. And so regionals couldn't afford it and they weren't welcomed on it. They opened that up and boom, all of a sudden the playing field leveled. We got a tailwind and I'm building a business that has the same, customer connectivity via technology that Bank of America had. And Stifel a year earlier didn't have it. No one did. And so that was a big deal. And so that Stiefel build was easier. They got progressively harder because market structure changes, technology, transparency, and resources became more important. But that first one was that was a good one. And if you if you ever looked at my resume, you'll notice they got progressively shorter, not because of the success rate. It's just when you go into an organization and you're pushing, basically you're bringing change, and that change requires resources. And those resources to be allocated require a risk culture and a level of risk sophistication. So it just depends. Each experience was incredibly unique.
Well, you've heard me bang on enough about, having a narrative that runs through a resume, through a career. And for you, Brian, that one is of the builder. And you talk about Stephen and the subsequent experiences. So what drives you to keep building, Brian, to keep going for it?
If I had to give myself a psychological evaluation, I think it's always the need to prove myself, or that feeling that I need to prove myself. Again, begging your way into a business and the feeling of having to earn your spot there every day. I think that was part of the drive, is to be relevant to what was going on and just not be a number on a P&L sheet, and being able to have an impact. So that's really was the driving force behind those types of choices. And the choices to move from one to another were ultimately where you feel like you've pushed the ball down the field as far as you can. The resources are just going to be X. And ultimately, you come up, my visions and my dreams ultimately come up against the very real world structures that an organization already has in place. And I learned that the hard way a couple of times where, you know, you struggle moving your business forward and it comes down to just a mismatch of expectations and what they want the business to be, what they're okay, their level of success and what they're satisfied with versus what I'm satisfied with. A new opportunity was always a fresh slate to build, you know?
Well, I don't know whether you've ever done a Venn diagram, Brian, of your experience, but I think, builder and underdog definitely overlap. There's
Yeah.
a lot to be said for that. So that's great. Really, really interesting to hear. And I think that transitions, nicely into quantum yield. Love to hear more about that. You mentioned a bit in the intro about, searching for something, looking for something new. Would be great to hear more about that. I guess the path to that decision to where you are now and really where you're at and what you're doing.
Yeah. I was looking to make a change again, and I felt like IG credit trading had kind of run its course just at the regional level for sure. I mean, the top 10 banks out there slash broker dealers, they're still doing wonderful. The top five are dominating the business. But that ability to build was just wasn't the same. And that's not to say that there's, guys at these shops that are still there that are making a go of it and doing fine. It just wasn't going to be enough for me as far as satisfaction. And I knew I needed to make a change. And I always describe it like this: you know, when you know. And it came in a late July, of all times. And it literally was like doing push ups. I was at KeyBank and I was doing push ups and I thought I could do push ups forever. And then all of a sudden, you just can't do another push up. And that's what it felt like. I just couldn't physically do it. I was done. And I knew if I sat there, it would have been disingenuous to me and the people I worked with. So I didn't want to, and I knew I'd be less likely to make a change unless I threw myself into it full time, because you can't have one foot in both worlds. I'm going to sit here and I'm going to look for a job because it's safe. And, the old saying, it's easier to find a job if you have a job. I've never bought into that. But I knew for me, I needed to make a clean break. And that's what I did. And I didn't know what I wanted to do exactly. I spent the next 8 months defining it, talking to guys like you, networking, finding out what was out there that was interesting. And ultimately, and we go through the journey if you want, but ultimately it brought me to quantum yield. And through my networking and conversations, I met Jason Wong and I had a few phone calls and presentations with him. He wasn't looking to hire anyone. He was just showing me what he was working on. And I flew out to Menlo Park and spent the day with him and I saw the technology and I saw his passion for it. I immediately couldn't sign up fast enough. I was hoping he would ask me to be a part of it. And ultimately he did. And I couldn't be happier. So that's what I'm doing now. And it's the most exciting thing I've done in quite some time.
Let's talk about a bit further in your role there. So it sounds like you've learned how to do push-ups again. You
Yeah.
certainly got that. Yeah,
Yeah.
which
Yeah.
is great. So Brian, tell us about the day-to-day and what that looks like for you now versus previous experiences as well.
Sure, sure. So I've taken on the role of CIO, Chief Investment Officer for Quantum Yield, both at the company level and at the fund level, just because we're small enough. Eventually, I'll migrate my day-to-day more at the fund level because I feel like that's where I can add the most value. But, and you asked earlier when we were talking about doing this interview about, what could a 20 plus year fixed income exec bring to a quantum systematic equity trading platform? And really, my job on a daily basis is to work with the engineers that are building this out, which ultimately, when you think about it at a base level, it is replicating, human decision making at a much faster, more efficient pace with a much better cost profile. And, the amount of sheer data that these models can sift through and the pattern recognition is mind blowing. So what I bring is the market side of it. What does a trader need to see? What does an investor need to see? What does the user interface need to look like? And then the ultimate goal for me is to be able to harness this model and build out trading strategies, be able to point this model in different directions within the market where we feel like we have a technical edge and be able to exploit that. And the other part is really, which excites me even more, is telling the story about quantum yield, what these models can do for a portfolio, because the returns we're seeing are exceptional. And ultimately, it will secure a place in a portfolio as an alternative investment. We think, as an alpha generator, alternative type of investment allocation. Is your whole portfolio going to be set up in something like this? Not initially, no. Maybe 5 years down the road, you won't even have an individual portfolio manager or, individual traders. But right now, that's the goal. It's to tell this story to, the investor class, institutionally and otherwise, and cue them into the possibilities that this type of technology has to offer.
And that aspect of storytelling, evangelizing, how, if you were to sort of look back on, when you started your career 25 plus years ago at Legg Mason, when you had, 3 legs on the table, and, hopefully you've got 4 now, but, to then, oh, that's great to hear. But to come to this point now where you're out there, talking to these sorts of organizations with that experience, how does that, for you, reflecting on everything that you've achieved, does this feel like, you are entering not the start of your career, not the mid-career, but this is a new one in itself, something that you can see yourself doing for a long period?
I absolutely could see myself doing this for a long period of time. And I see it as it's a new career, but it's also one born out of a lot of experience. I mean, I don't say that from a point of being boastful, but it's a collective experience over the course of 25 years of dealing in financial markets, understanding market structure. In fact, I was talking with a friend the other day. I mean, every market has unique characteristics that make it a market. And if you can trade IG credit, you probably could trade used automobiles or just houses, artwork, anything. I mean, you're looking at liquidity dynamics, depth of market, how fast things turn over, velocity, momentum, just so it is all interrelated to a degree. So for me, I feel like I'm very well prepared. You asked about the evangelizing, which, I love to tell the stories, but part of our job early on as traders, you were also, you were advocating for your positions, telling your story, what you liked in the marketplace with conviction, because you had a position to back that up. You were making a market to back that up. And that was a lot about trading as well. There was a level of creativity. I mean, when you think about it, we spent the majority of our time as traders in the early years divining valuations for underlying bonds using benchmarks and that sort of thing. That evaporated. I mean, those days are gone. Now it's on a screen and everybody's like, well, that's the price. If you want it here, great. If you don't, that's okay. What side of the risk you want to be on? So the story aspect of it ties in very well to the things I enjoy doing. When you believe in something and you see the benefit of it, it's an easy story to tell and you want to communicate that.
And to have had the career that you've had, Brian, to where you are now, to what you're doing, and to be as motivated and excited about that, there's got to be other drivers outside of work. What has it been for you that has kept you, going throughout, some incredibly challenging times from a markets perspective, in really challenging, positions of leadership? What else have you done outside of work to sort of keep you in, in that sort of frame of mind, with energy, excitement, and enthusiasm to keep going?
Well, I mean, you learn early on when you're a young man, balance doesn't matter, right? You can be work 12, 15 hours a day, hang with the guys after work and get back at it at 6 in the morning the next day. But as life progresses and you have family and kids, I have two daughters, it becomes balance becomes more important. But also your motivations change. You no longer are doing it for yourself. You're performing for your family and your children and their futures. But for me, I would say the biggest underlying motivating factor is fear of failure. And that's it. It literally, and again, I think if you have the ability to self-reflect, you'll find some interesting peculiarities in your personality. And I still have that same level of being afraid to fail, which means I will go to any lengths I possibly can as far as effort and time put in and learning and just having an insatiable curiosity about the world, about the craft you have and the industry you operate. And the fear of failure for me has been the biggest driving factor. That fear of underperforming my own expectations. It's nobody else's expectations. It's mine and how I feel about myself. And that might be, and I think everybody has a little bit of that. I have a lot of it, and I know, but I can also harness that and put that to work, which means I will go to great lengths as far as what I'm willing to learn, how I'm willing to engage, the effort that I'm willing to put in to make something as amazing as I possibly can and achieve those goals. It takes a relentless type of energy to do that. And I'd like to say it comes from just this amazing place of being a centered individual, but it comes from fear.
Yeah. Well, I think all the top performers, throughout, that there's something that is wired, within you that keeps you going. There's obviously the classic in sport, Michael Jordan. He wasn't just competitive on the basketball court. In golf, in every facet, he had to win. There was the book. I forget the author's name, but Only the Paranoid Survive. There's something in truth, that is within, and I think if you can find that, but I think it takes a lot for people to actually be comfortable with that. Some people use that as a source of confinement in that they don't want to let that. But actually, I think if you can recognize that, and again, talking to top performers, as soon as they realize that and actually go, I'm all right with that, that's what keeps me going. That is, I think that then just unlocks that next level of performance. So, the fact that you talk about it openly like that and transparently, I think just obviously talks to you and sort of where you've come from. And it can be a source of positivity. Some people might see it as I've got this crippling sense of, fear of failure. But you're like, that's what keeps me
Yeah.
alive. That keeps me going day to day.
Yeah.
So, cool. Okay. A couple of other things. You mentioned about family. You mentioned about, the fear of failure. How do you find, after a day when you've been in the thick of it, what's your way to either get up for a day or unwind after, a full on day in the markets?
For me, it's and I this might sound cliche. I think some people are able not to do it. I've got to work out. I've got to go to the gym because, there's a level of energy that if it's not, expelled or, directed and released, it becomes anxiety. So it's like at the end of the day, in order to relax, I got to go get tired and I'll do that. So yeah, and I have hobbies. I mean, I have, guitars and amplifiers. I've always wanted to be, able to play in front of a live audience. I've never done it. I tell people I've been practicing for a concert no one will hear for the last 40 years. But those are the types of things I do. You have to have some sort of outlet. And of course, I love to play golf and that type of thing and ski. I'm a huge skier. In fact, I've got a knee surgery scope coming up here in a few weeks, just from years of wear and tear. So those types of outdoor activities and things really kind of invigorate me. But it does provide that balance where you feel like, you're ready to get back at it with the same amount of intensity day after day.
Yeah, absolutely. Awesome. Going to come on to a couple of things to finish up, Brian. This has been so great to be able to speak with you today in this fashion and just hear more about your experience. But a couple of questions just to wrap things up. You spoke about your career earlier, how you started, back in those early days with Legg Mason. What's something that is as true today as it was back then? People talk about technology. Obviously, what you're doing in the day to day, wildly different. But what is as true today in the markets as it was back then when you started your career?
Well, I mean, life in general, there's certain things that continue to hold true that technology, in my opinion, will never take away. In order to be successful, you just have to have a lot of passion and a relentless pursuit of what you're setting out to do. If you don't have that, it's harder. It's called apathy, it's called a job. And I never wanted just a job. And in fact, when I left KeyBank in July, that was the thing I knew in my mind. I didn't want a job. I needed to fill that passion with something. And I knew I'd find it, but it just took time and patience. But I will also say, I'll tell you this, one of the most vivid lessons I have was when I was trading CDs at Legg Mason. And I goofed up one day. At the end of the week, I had not closed out a CD that had already closed out. So basically, in market terms, I was short something that didn't exist, that I couldn't produce. The good news is it was a relatively welcoming environment. I was trading retail CDs for retail brokers at Legg Mason. They weren't going to storm the castle and burn it down. But there was a moment where my boss saw, I guess, a computer order just at the same time I did. And he said, "McGrath, did you forget to close this CD?" Or I was working with another guy. I said, "Did you forget to close out this CD?" And the kid that I was working with stood up, plain as day, on the other side of the desk, pointed his finger at me and said, "It was him." And I stopped and I was like, it was me. It was absolutely me. I've messed this up. I just realized it. Please tell me how I can fix this. And in that moment, in owning my mistake in real time, live in a very public way, not only felt great, but it also made my boss incredibly proud of who I was or who I was becoming as part of that team. And the other guy didn't fare as well, and part of business and part of life is owning your mistakes and being okay with being wrong. And in the
Yeah.
financial markets, we're wrong all the time. It's incredibly difficult to bat 1,000, in the financial markets. It's just not going to happen, right? So, if you're 55 wins, out of 100, you're doing amazing. If you listen to Federer, right? Federer only won 54%, I think, of all the points he played, but he won 80% of the matches. That type of reality resonates. That resonates with what you do on a daily basis. It doesn't matter if you're trading and or otherwise, that you have to be realistic in your expectations of yourself and own your mistakes.
Final question then, Brian. Just with that, what is the biggest lesson that you've had to learn the hard way, throughout your career that you would reflect on?
That's an easy one to remember, but probably harder to articulate. That when you go into an organization and you're attempting to change something, you have to realize that there are stakeholders that are not invested in that change always or off the bat. You might have a mandate to grow something, to do something, but you will not do that by force of will and mandate alone. You really have to socialize the different stakeholders, find out what their needs are, and move in a direction that also benefits them, or that they see the benefit of what you're doing. At least take the time to go through and build that support for what you're doing internally. And that took me some time, and I learned that the hard way. And it was a painful lesson. It absolutely was. And, it came back to bite me. I wasn't careful enough. I wasn't thoughtful enough, and I'll never make that mistake again.
Brian, it's been wonderful speaking with you. Thank you so much for sharing your story, talking about your journey.
Absolutely, Bill.
You've had a brilliant career so far, and you've got a fantastic future ahead of you. Really exciting one, it sounds like. Really grateful for your time. Thanks very much.
I really appreciate it, Bill. Thank you so much.
My pleasure.